We're 3 hours into trading, and the market is all over the place. Really hasn't been any rhyme or reason to the action today, even with a 50-point basis cut by the Fed. So let's go to that daily chart and see what's going on. Actually, let's go right to the 5-minute chart because we can see that giant spike. So market's starting to come in a little bit after the open, and then boom. Look at that long green candle. The Fed announced that it was going to have a 50 basis point rate cut. The market you would think would be gangbuster, go, go, go. Not so much. We retraced half of that long green candle almost immediately, and that was the first warning sign. You can see how the market just was not able to move higher on that news and eventually rolled over. I saw this cross in my 10P indicator. It's all I use for day trading the S&P 500. When I saw this cross, I said, I would not buy this, folks. My indicator is telling me that this move is not going to work out. You can see the subsequent selling. 1, 2, 3, 4 long red candles closing on their low. Got this candle here where we try and get a little bit of a rally going and it gets spanked down immediately. That's a sign of selling pressure. Right now we've got this little bounce is starting to fail and my 10P indicator is starting to roll over and cross right here. So I believe that we are going to see the market come in a bit. We took out the low easily, and if a 50 basis point rate cut by the Fed can't get investors excited, what can? I think that more than anything, the market is probably a little bit ahead of itself right now. I had mentioned to you days ago, I'm looking for a rally off of that low. I think we're going to get up to the 200-day moving average, and then I think we're going to chop around for a while we're waiting for the dust to settle, waiting to find out what coronavirus is going to mean to us economically and what the impact will be. So let's go into that daily chart, get a little bit of a longer term perspective on things, and take a look. So there we've got the 200-day moving average. Let's put up the 100-day moving average. We can even put up the 50-day moving average. So we get this big drop and we have this bounce right here on Friday. Market closes near its high. Okay, that's pretty nice. We opened a little bit higher and that was very positive. I mentioned yesterday that there were some asset managers buying because they were reallocating. They were selling bonds and buying stocks because they have to realign their portfolios. So we saw a big pop on Friday. We saw a 70-point rally in the last 15 minutes of trading on the S&P 500. So we had a little bit of follow through yesterday. Let's go into that 5-minute chart and take a look at the price action yesterday. You can see how the market opened higher and then it came back and it gradually started to give back some of those gains. And then we had a really nice move higher. So we were able to catch this move yesterday. We were selling bullish put spreads early in the day. Those are in fantastic shape right now. That was the strategy that we really wanted to employ. So we're sitting pretty right now. We're just waiting for all those spreads to kind of run their course. And we're not really having to force any trades. Let the market chop around, let it do what it's going to do. So through the course of the middle of the day, we get into this nice tight trading compression right here. I'm going to put my 10P indicator back up and you'll be able to track along with me. And I'm going to take all these moving averages off because they just get in the way of the chart. We know that the 200-day moving average is very close to where we are right now. That will be a level that we can lean on for support during the course of the day. But here's what happens. We get this sideways compression right here in the SPY yesterday. Market's not really going up or down, and this indicator is kind of chopping back and forth, and we get this little bit of a sell-off in here. And we get across, and as I saw this really deep drop in the indicator and this bullish cross right in here, I told everyone, folks, get long. I think we're going to take out the high of the day and really go here. And so I got long in here. I got shaken out on that long red candle. And as soon as we broke through the open from that red candle right in here, I said, get long. We're back in. I made about 33 S&P 500 points. No, I did not catch absolutely all of this move, but trust me, I was very happy. We all were. Market closes on its high. Then what? Well, we start doing a little bid checking this morning, and the market comes in, and then we get the Fed news. Right now, you can see how we're starting to drift lower. We've taken out this upward sloping trend line right here, and you can see that 10P indicator crossing. If I were in the chat room right now, I would be getting short. So watch for this. I'm going to keep it up in the background, and we're going to take a look at a few different stocks that we can trade. Our bullish put spreads are so far out of the money, it's not even worth me showing you. Amazon, I'm 150 points out of the money. Nvidia, I'm probably 60 points out of the money. So far out of the money on all these that it would take selling pressure equal to what we saw last week in the next 3 days for me to be in trouble. With the Fed easing, that's not likely. These spreads are toast, and I would have the opportunity to buy them back in for a profit at any time if things start to get ugly, and I am not expecting that. In fact, in terms of the coronavirus, there are some scientists that I've heard saying that coronavirus has actually been around for quite a while and that we have been spreading it. We just don't know that we have it because it has not been fatal in many cases and because hospitals and clinics are not testing for coronavirus. So when they have all of these cases that pop up suspiciously with no contact or no known contact with other victims, that explains why that's happening. It's actually been around for quite a while. Is this a great big nothing burger? I don't know. I really don't. But I know that the flu has cost 22,000 lives in February, and coronavirus is somewhere around 9,000 right now. I'm not completely discounting, but this was a huge, huge market decline. This was panic selling on the S&P 500, plain and simple. So I don't know what the coronavirus is going to do, but I know that that is panic selling. And when you get waterfall events like that, everybody starts wondering, what does the other guy know that I don't know? I wasn't worried about it before. Maybe I should be because, gee, this is awful nasty. And so I told you that this decline had as much to do with bullish sentiment and underhedged asset managers as it did with the virus. Once the sell programs kicked in, they triggered one another, and then we got this massive, massive fall. So we're right now going to spend time around the 200-day moving average. I think that if we get up towards that 100-day moving average, which in my Sunday night video I had mentioned, we may try and reach up for that 100-day moving average. And if the momentum stalls and we start going sideways for a little bit, this is probably where you want to start looking at selling some out of the money bearish call spreads. You can see to the right here, the market is coming in a little bit here. So that's kind of how I see things playing out right now. I am going to be doing a weekly swing trading video tonight for my members. I'm going to be looking for trades on both sides of the market. Probably will be doing 4 spreads again this week. I don't know what that mix is going to be. I only know that I will be looking for stocks that have really good relative strength and stocks that have really good relative weakness. I will be selling those bearish call spreads below major technical resistance, and I'll be selling those bullish put spreads above major technical support. That's how we're going to do it. We're going to take advantage of these very inflated option implied volatilities. And if I bring up the VXX, you can see how it spiked from here, and it has been able to maintain that very high level. One thing I will be watching for is I'd like to see VXX try and come up and take out this high and form a lower high. Now, instantly, I probably wouldn't read too much into it, but if a week goes by, the market sells off, we find support, this tries to get up and makes a lower high, that would tell me that there's market support and that VXX might actually be a decent short. There is a bullish explosion alert. I don't know that stock, so I'm not going to go into it. I will mention that these explosion alerts, if I looked at that and I said, wow, Qualcomm, wow, eBay, I would be all over it. These explosion alerts, you may only get 8 of them a year to trade, but one of them is all it would take to pay for everything. These are huge. I monitor volume for every stock on a 5-minute basis, and I know what the average 20-day volume is for every 5-minute increment for every stock. So Option Stalker has a ton of data that we use to find all these stocks and to do our analysis. So in any case, I'm going to take, why not look at it? What the heck? There's nothing else going on right now. XENT. I wouldn't even pay attention to this. We're looking for a horizontal move like this and a long green candle that blows right through all horizontal resistance and major moving averages. If I see something like that, then I'm going to be all over it. I'd go into the 5-minute chart, I'd click buy, I'd drop the line, and I'd be in about half a second. So let's take these alerts down. We don't want that bothering us anymore right now. But that is the explosion alert. And you can see on a 5-minute basis, there's your big spike and there's your volume. So something's going on with this stock, and maybe we'll pay it a little visit afterwards. But I like to see these bullish explosions have that 5-minute bar, stay on that 5-minute bar right near the high, and then the next bar starts building up on it. So there's something going on here. There's some news in it. It's a smaller cap stock, so those tend to move wildly. Large cap stocks don't move that much. So when you see a really big name on there that you recognize and it makes the type of move that's going to get it on this alert with the accompanying volume, boy, you know that's going to be a great trade. So excuse me. Let's go and take a look at some stocks that I like. I am just going to go right into the symbols. Today is a very choppy day, so let me qualify this by saying this should be a day when you don't do a lot of day trading. I can't give you anything that I'm going to like for overnight because we've come up to the 200-day moving average. That was my target. And I think that the market is going to chop around for a while here. So I can't say take a long position overnight. It's going to work out great tomorrow morning. I don't know what the market's going to do in here. Be the same with short positions. I don't know that we're going to find resistance here at the 200-day moving average and roll over. It's a time to really just sit back and let time decay eat away at our bullish put spreads. That was the original plan in the first place, and we've got to get through this period for about another week or so. Let the dust settle a little bit, start looking at price patterns, then we'll get a feel for where the market might possibly be going. But I always promise you that I'm going to show you a couple of stocks that look really decent. I do like Amazon. I think Amazon's got some good relative strength. You can see how Amazon is through the prior day's high. You can see how Amazon found support on the prior day's high. The market, by the way, is still it's slightly down from the open, so a little bit lower than the open, not dramatically. So you've got Amazon up, market is down. So I like it. Netflix definitely has put in a good day today. You can see that's the opening right in here. Netflix is higher. We've got a nice upward sloping trend line. Let's overlay that SPY. Take a look at that relative strength. You can see how the market pulls back, pulls back, pulls back. That's the gray line that I just overlaid. What did the stock do? Boom, 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 moving higher. Right now, the market's kind of chopping around. What's the stock doing? Starting to grind higher. Netflix is about the best stock that I see right now that you'd want to day trade from the long side. It has actually held up very well during this market decline. So I do also think that it's a stock that you might be able to day trade from the, swing trade from the long side if you felt that the market were going to move higher overnight. You can see there is some resistance overhead. Long tails above body tell you that it's going to be a little bit more difficult for the stock to move through that price pattern. But look what the stock did during the big market crash last week. It was grinding higher. There's a notion that people will sit home and watch movies, and that will be their form of entertainment, that they won't be going out and traveling or going to shows or restaurants, and that Netflix will benefit from that. But I think the stock actually looks good. So that's a long that I like. ZM, this is conference software that they use primarily in China. And you can imagine, again, with the coronavirus, they may be doing a lot of video conferencing. This stock has done very, very well. I like ZM also, really good strength. You can see here, market's been pulling back. I always like to have the S&P 500 up in the background so that I know what the market is doing. But this is a beautiful sign of relative strength. S&P 500 down, stock starting to move higher. So my three longs that I like for the rest of the day and into tomorrow are Amazon, Netflix, and ZM. By the way, those bullish put spreads that I showed you yesterday, golden. The ones that I put out there Sunday night on Amazon and Google, I was able to get filled on Amazon. I tried to fill on Google yesterday, was not able to get that one done, but I was able to get long some higher bullish put spreads. So Google also looks good today. I am trying to focus on stocks that don't have a lot of exposure to China. I think that they're going to be supply delays. Google, software company, think people will be watching just as much YouTube. Amazon could benefit from people staying home and shopping. So I think Amazon could also do well as long as their supply chains are not broken. So what do we like on the short side? Win. Macau revenues. Macau revenues were down 87%. Well, we expected that. They pretty much shut all of China down. So the fact that nobody was going to the casino is not surprising at all. This is going to hurt Wynn for a while. It's going to take a while for them to recover from that. You can see the steady selling pressure today. And there's the market. You can see that little market rally. Well, Wynn didn't rally. It keeps going down. Let's put that SPY overlay up. And there you can see market bounce right here. When continuing to go down, this is a good short. So I think you could probably hold Win overnight as well. Let's put up that D1 chart. And there you can see major horizontal support coming up here. So you have to watch that very carefully. If it takes out that horizontal support, it'll be even better. But it's got some pretty good negative momentum building right now. So overall, let's do a recap. You always hear me say this: market first, market first, market first. Everything starts with the market. And if you cannot get a good read on the market, then you should keep your trading size down. You should keep your trade count down. That's where we're at right now. We had a dramatically oversold condition. We've got a lot of green and red candles intermixed here. What does that tell me? That tells me the market hasn't decided what it wants to do or where it wants to go. It's going to chop around. And folks, part of being a good trader is knowing when not to trade. I see this day in and day out. Too many people trying to force trades that just aren't there. And you end up wasting your capital when there is a low probability environment. And then when the high probability environment comes around, you don't have any firepower because you've just taken a bunch of, pardon my language, crappy losses, and you're once bitten, twice shy, so you don't want to jump in on anything. You've got to learn not to trade. So I hope that this lesson gives you some insight on what you should be doing today. Those are some good stocks that you can follow. Keep your size and your trade count low. If you like the content of the video, please give it a thumbs up. Please subscribe to the YouTube channel. Turn on your notifications so that you know instantly when I post these videos, because I'll always give you some great trade ideas and I'll provide some excellent education as well. Thanks for watching. We'll see you tomorrow morning.